The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. This is Friday in a very exciting week. We've got volatility jumping around again, which we love to see. And so we're going to have Rich Anderson as our guest at the break here because we're looking. You're right, Dr. P. Anyway, someone just Skyped or emailed me, and well, they private messaged me in the room about the market going down. Anyway, the main thing I wanted to mention is Rich Anderson will be our guest here at the break. We're going to be talking about the grain markets because we've had a meteoric rise in some of these grains, fortunately, and we're at a full moon now, so we might be getting some type of a respite here from this Argentinian weather market, but we don't know that. I wanted to go over this chart here in the DAX because if you'll look at that DAX chart, folks, you'll notice when it started to roll over this morning, it was making that 135 pattern that we did a webinar on about 6 or 7 months ago. We see that more and more in markets that are rolling over. And if we take a look here, you'll be able to see the same thing in the FTSE. It did exactly the same thing. It just rolled over. And these markets have continued to go down in the last couple of hours, of course, because this was done about 2 hours ago. So it looks like we're heading down to this level, probably. We'll see. Let's take a look here at the E-mini S&P here this morning where we are. This is what we were looking at yesterday. As you recall, we were expecting the market to have a pretty nice rally, and you'll notice that we rallied exactly to the 382 level of the high we made back here the other day. And then we've come down, and you notice the ABCD structure comes down to 2645. And the 1.27 expansion off of the last 7 days came in at 2652. So 2652 might be some good support in here. We don't know that yet because it's a little bit early, but that could be very, very interesting here. We've had a really big break. If you recall yesterday when we were looking at the Dow Jones, we were watching this market with the potential of holding. Let's just get it up here so we can see it because it's important from a failure standpoint when these happen. You'll notice that we were looking for support to come in around that 24,000 and change level, and that held for a very, very short period of time. And then, of course, shortly thereafter, we'll bring this up here, you'll be able to see that once it broke, and this is really important, folks, because when these patterns fail, they're just not talking to you, they're yelling at you. And they're telling you, look, this thing really wants to go lower, and that's exactly what we did. We dropped from 24.9 all the way down to 24,300 and change this morning, and that is a pretty important 1.27 expansion, and it's also, roughly 50% from the low we made back in February. And if you remember, the other day we had one of our favorite people on the air, Mr. William Meridian of Cycles Research fame out of Vienna, Austria. And Bill gave us some very, very key information that I wanted to reiterate to you. If you'll just give me 1 second here. And that's right, the Dow probably hasn't been down 300 points a day. But remember, on a percentage basis, you can't really use that as a benchmark because the Dow is a lot bigger now than it was. So that's it. Let's just take a look at what Bill was looking at. You notice that his projected turning point in the S&P is March the 2nd. How many days is that from today? Oh, that's today. So keep in mind that this might be a turning day. Now, the question is might, and that's the key thing to be looking at because that's what is really important. When we look at these support levels, we have some key support levels in the S&P, as we mentioned before, down around that 2645 level, and also it could go actually lower than that. if the limits or the circuit breakers come in, where the market breaks too much like it did on election night, that number comes in at around 2490, I believe, in the S&P is the circuit breaker number. That means it can't go down anymore for at least a half an hour, and then they reopen or something like that. But you don't want to see that, because then you're in these panic modes and the liquidity dries up and the trading is not much fun as it used to be. But let's take a look here one more time here at this E-mini S&P, where we would be just looking at it. Hold on here. Okay, that's someone just threw 2 cents into the piggy bank, folks. They're expecting a big down today and a crash on Monday. And if it happens, we'll give him credit. And if it doesn't happen, if it happens, I'll take the credit. And if it doesn't happen, I'll let him take the blame. That's a person's opinion, and I respect that. And if it works for him, that's great. Anyway, let's take a look at the Dow E-mini S&P. You'll notice down there at that 2635 level, that's about 20 handles from where we are right now. That is a major 61% retracement. That is very, very important, and I think that could be something that would be interesting. Now, the reason why these numbers are interesting, folks, and let me just give you a little bit of a refresher. Here's where we were the other day on Monday, when we were talking about this, when we were making a perfect 61% retracement in the New York Stock Exchange Index. So what did it do yesterday? It came down and it stopped right at the 61%. But believe me, that is not going to hold this morning. We're most probably going to go down about another 1,000 points. Let me see, 75, 25. No, about 300 points to 122.80, and that would be the 78% level holding, but we don't know that. All I wanted to do is to show you that the importance of this 61% retracement, and also with the New York Stock Exchange Index, because that's the index that is the purest of all, because it's not, first of all, they don't trade it in the futures market, which is probably a blessing, but it gives you a really broad brush strokes of what the stock market's really doing. These are 2,200 of the most actively and liquid stocks in the U.S., and also there's foreign stocks in there too. So it's a really broad index, and it's a very good one. You'll notice that we went into that gap that we left on February the 2nd, and now we're looking at what's happening. Now the ABC structure on this takes you down a whole lot. That could be a crash scenario, but I don't think that's going to happen that way. The fact that we're having these pictures of, let's just think of 1 second here. We're having pictures of this tariff thing coming in, and that's probably going to be blown a little bit out of proportion. And whether that's going to be the case or not, you don't have to wait and see. Remember, the news follows the trend, so things change. We'll see what happens, and then we'll go from that level. Anyway, we'll just keep an eye on these as we look around what these markets are going to be doing. Talking about the gold yesterday, hold on, we'll take a little break here, then we'll get back to gold. Rich Anderson at the break, folks. Anderson Capital Management, 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we've got a caller in from Massachusetts. Charlie, are you there?
I'm here, Larry. How are you?
I'm above ground, staying away from open graves, my friend. How are you?
I'm the same way. Well, I don't know. We're probably about the same age. I don't know. I can't remember.
I'm
anyway,
39
listen,
and holding. What can I help you with, my friend?
I got TVIX.
Uh-huh.
And I know this is probably not within your comfort zone per se, but it is, it's 2 times VIX short.
Okay.
Given what you're saying about the comment you made about the market maybe going down, I'm in it already. I'm just wondering where
so
you think
you want volatility to drop on this, correct?
No, I want volatility to go up.
Well, then that wouldn't be 2 times short VIX. That would be 2 times long VIX, wouldn't it? Because you want the VIX to go higher. With the market dropping, you want increased volatility as people take protection.
I don't know. It seems like the more volatile the market is, that the higher this goes.
I could be totally
me
wrong.
a stupid person. That's okay.
This looks bullish. This chart looks bullish. I posted it into the room here. The last trade I show is just under 10, and I think it could go to 17 without too much trouble at all.
Wow.
Yeah, it's a beautiful ABCD pattern. It pulled back to the 78% level. That made the C level. The A leg is down around 5. The B leg is at 15. Your C leg is down at 6.5, and your ABCD structure takes you to 17.5.
Okay. Yeah. Well, this is one of those things that's really volatile, so you never know what can happen. Yes. So I'll probably go ahead and just plan to take a pretty decent profit and hope I can get in again one day.
Where did you buy it?
859.
Okay, so you're ahead a little bit. So, the 2 things you could do is put your stop at break even and let it rip, and then you have no worries. You're in a risk-free trade. That's where you want to be.
Yeah, that's true. Yep.
First of all, stop and think of this. If the market backs off today with the Dow down 250 points, you probably don't want that. So I'd put my stop at break even and go out and have breakfast.
I love your attitude.
Well, that's what I would do. I mean, I don't know what's going to happen, but nobody else does either. So the only thing you can control in this trade, Charlie, is the risk. So put your stop at break even and see what happens. That's what I would do.
Yep, that sounds reasonable. Thank you very much, Larry. Good to talk to you.
Hey, good to you, and Happy New Year to you, my friend. And thanks for calling in. We appreciate it.
Absolutely. Thanks.
You bet. Okay, folks, we're going to take a little bit of peek here at the gold and silver. We had that big bounce off of that bottom yesterday that we were expecting to have happen, but that's one of those days when that train is setting at the station. And guess what? They left me without the train because I had to leave and I didn't get the secondary opportunity to buy it, and ended up losing I think I lost $200 in it. I could have made $2,200, but that's ifs and nuts. For candy and nuts would all have a wonderful Christmas. But anyway, this is what's happening today. You'll notice here in the gold, let's just get this up here and take a look at it. The gold has had a pretty good move, but again, silver is lagging again. Silver has hardly bounced at all, and I was really surprised. Now, remember, we've come off more than $20 an ounce in gold just in the past 24 hours. So we're most probably getting ready, to go, to go higher. But all this started, folks, with something that we were spending a great deal of time on here in the Tiger Den these last few days, and that was with the euro, because the euro was at such a key level that we were bringing it to your attention because of the fact that it was sitting there with such an incredible pattern waiting to happen. And we'll bring it up here because this is what we were looking at yesterday, and we were saying to pay very close attention to it at that 121.60 level. The low was 121.56, and it has taken off like a deer dodging the headlights, folks. It has had a huge move, and it appears that it's getting ready to go a great deal higher. You can see it here on a little bit longer time frame. Going back over a longer time frame, you'll notice that not only did it hit that 61% retracement, but it made a near perfect 49.5% retracement of the low from way back in December. That's a major low, and we're already trading above the 123 and change level. So that's telling you this euro's has got potential legs, and that means that dollar index is going to be hammered too. Oh, we got another caller in from Boston. Fred, are you there?
I'm here.
Well, I'm talking about the euro as we speak. What can I help you with?
Well, I'm looking at the euro USD, and I wanted to see if you think it's going to continue to downtrend.
No. I think I was just talking about it yesterday. We were talking about the importance of the bottom at 121.60. That was a 61% retracement from the yearly low in January. It was a 50% retracement from the low in December. Spot on at the exact number, 121.60. The low was 121.56. We're now trading at 123.30, almost 200 pips higher. This looks like it has some really good power in here. And the U.S. dollar index has started to back off substantially, as it should. So I think the euro's got more to go, at least another 100 and maybe 200 pips before next Monday or Tuesday, the way it looks to me.
Awesome. Well, thank you so much.
Well, I hope that helps.
Yes, you have a great show, and thank you.
Well, thank you, Fred. I appreciate it. I'll send that $20 to you just as soon as I can collect it from somebody, okay?
Awesome.
Thanks a lot. We appreciate it. You bet. Okay, that's the euro. We were talking about this yesterday. We were saying the same thing in the yen. Dollar yen was giving up ground. That was number one, or number two with the euro number one. Number two, we had the British pound, making a perfect Gartley pattern down there at that 137 and change level. And that one worked perfect. The Canadian dollar was spot on. They were all just lined up like, ducks on a pond. And when you see that, that really gives you some confidence that there's a major cycle, occurring at that time. Plus, we had the full moon yesterday, and we'll see if this is going to be, some type of a turning point from this level here. Now, the other one that we need to keep an eye on, because it's getting more and more let's get Bitcoin up here because I have some really good information on Bitcoin. Folks, you're not going to believe this, but I'm giving a speech in China and Hong Kong in March, And they've already alerted me that I cannot use the word Bitcoin in Hong Kong and China. It's against the law. That seems a little extreme here, but they said I can't use the word cryptocurrency, and I cannot use the word Bitcoin, but I can use the word BITUSD, which is the Bitcoin under US dollars. I can use that symbol, but I can't refer to cryptocurrencies, and I can't refer to Bitcoin as a name. So I have to respect that, because when I first started speaking in China back in 1996, I remember I was in Beijing, and when the word Tiananmen Square, when Tiananmen was mentioned on CNN, they blocked the channel for 1 minute. That's control, baby. That's control. 877-927-6648. Stay tuned for Richard Anderson, Anderson Capital Management.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We have Rich Anderson of Anderson Capital Management on. Rich, how are you doing today, buddy?
I'm doing great.
You having some fun in those grain markets?
Yes, sir.
Hey,
years I've always told you, once the farmer starts putting that money into the ground, that's when they come alive. That's normally in end of March, but they came alive a little early this year, which I think is unique and tells us about a situation.
Yeah, Argentina is still in trouble, correct?
Yep. Used to be we
Okay.
only had the summer weather markets, but now South America grows, consequential amount of beans like we do, and so we have
Sure.
markets, and And that's where the weather market is this year. But the bigger picture is we've taken out the 2016 highs in the CRB, and the next resistance is the 2015 highs, which are about 15% higher. I mean, look at that. Gasoline's doubled in price since the lows in 2016. Copper's up 50%. Corn's only up 13%. Corn's got room to go.
It sure does.
The higher the bean price gets, the more beans they'll plant this year, and the less corn, etc. Yeah. That's why you have to look at both the November, which I know you're covering closely, and the May, because they're kind of, the May is South America and November is U.S. And the higher we go now, the more for November, ignoring any weather problems we might have this summer.
I remember what you told me many, many years ago, that oil and gold are indigestible, that food is the real king. So if we ever had another crop failure, given the fact that the situation is tight all the way around, boy, we would be looking at some really serious problems around the world, wouldn't we, Rich? I mean, that would cause havoc.
There's absolutely no question. I mean, look at just a few years ago, Minneapolis wheat got up to $25 a bushel just because the commercials needed it for their blends, and we had this huge problem. And you got to be on the right horse. As an example, the low last month in the Minneapolis wheat was $5.92, and right now we're 6.30.
Yeah.
Chicago and Kansas City have gone vertical.
Yeah, I know. I saw they had a beautiful butterfly pattern down there.
In Minneapolis is spring crop, so that's why they can plant more Minneapolis, so Minneapolis doesn't get the lift that Chicago and Kansas City get. And that same thing's true with May beans versus November.
Okay, we get a question from one of our listeners here at TFNN, Rich, about, they know that you are, were the person that hired Simonly many years ago when he first started in the business. But what is the main service you use for your weather, and the main services that you use for looking at the fundamentals behind these markets? Because I know you have farmers that depend on you of what you're looking at. Do you have? I know you like Bill Gary, as I recall, but are there any others that you really like that you get a good information from?
Well, remember last time I was on, we talked about how our buddy Rick had called the low in the dollar, and the dollar's gone up since. Yeah. But you have to be a client of the firm that he writes for, which is Morgan Stanley. Mm-hmm. The weather services. There's a ton of private forecasters. John Davis used to be my favorite meteorologist until he went into the private world of energy, where he just does work for one. But there's a ton of. I think just watching the Weather Channel probably gives you as good as anything. But there's a ton of different universities that provide these weather maps. Uh-huh. I mean, a lot of this stuff you can go on Google and search and get for free.
Get it free, yeah.
How to use them, and that's the key. That's the key. By the way, options are still relatively inexpensive. Think of it like the VIX. You know how the VIX was down at 10 or 12, and then was 15 and 8. Well, the bean options. The other day I was buying some. They're 16 to 20. Well, they could easily be 30, 35 here.
Yeah.
And plus, you can control your risk on an overnight event, because when it does rain, it goes straight up, and then as soon as there's rain, it goes the other way.
We got a call from our good friend John in Philadelphia. John, are you there?
I am. Thanks for taking the call, Larry. Good morning, Rich.
Yeah. Good morning, John.
Rich, I wanted to pose a question to you about the cattle market, of which I know you're expert dealing in the physical trade. Cash cattle, the live futures contract, the current cash price, as I understand it, is up near 125, 128 currently. And my question deals with what I see happening out in the summer futures. Rich, I see the August futures contract is down at 113, as the trade is expecting the feedlots being full now will ship big supplies into the packing plants come summer. Rich, my question is there a case to be made that the trade is wrong, and that come July, August, things are actually tighter, and this August futures contract rallies quite a bit from here?
That could be the case. Anything is possible. What they're looking at is they're looking at the numbers right now, and while the cash price is 128, you might even have some 130s. When you've got a higher cash price and the board, going back out is cheaper, they sell these cattle at a lighter weight to move them faster. The numbers say that by the middle of March, we're going to start to see increased numbers. The demand in the summer is always the weakest, right? And it bottoms sometime towards August, and that's why you see that reflected in the prices. In the old days, we would typically have a $10 break between our spring highs and our summer lows. We're at much higher prices now, so a $10 break in those days might have been 15%. Well, a 15% break from 130 is kind of already priced into the market, so we might be at value, but as a technical trader, I have to see a pattern or some kind of signal for me to, I don't just blindly, pick a level that has a value. I've got to see the market tell me that it's got value. But it can easily happen. The USDA has always comes out with their forecasts of prices, and they've been historically so wrong it's not even funny when it comes to livestock. But right now, as an example, yesterday the hogs took a hit. The biggest impact that could happen to hogs is from China in imports, and I believe that that nervousness about the trade things, which take aluminum. They actually buy our aluminum scrap. They import more aluminum scraps from us than they export aluminum to us. So it doesn't really impact them too much. They're just sitting over waiting for their time to pick the market they're going to protest on.
Yeah, no, Rich, I like that comment on that aluminum. Just as a sidestep, China importing scrap from the U.S., refining it, fabricating it, shipping it back to Mexico, then moving it from Mexico to our borders to get around the rules.
Right.
Yeah, it's very funny. Rich, could I lastly ask you, just on the cattle market, JBS, the Brazilian guys, of course, are massive out in Brazil, but they own huge interests here, and they went through a massive fraud, corruption, theft scandal a year ago. Has that changed the dynamics here in the U.S. at all, Rich?
Oh, absolutely, because they've had to liquidate a lot of their holdings in the United States, particularly their feedlots, and they're not the factor they were. That's changed the market.
Thanks so much, Rich.
Hey, thanks for calling in, John. Rich, could you stay with us for a few more minutes?
Sure.
We'll pay a few bills. Rich Anderson, Anderson Capital Management.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. We're talking with Rich Anderson of Anderson Capital Management. We got a really great question here from Washington, state of Washington, not the D.C. Rich, what is the influence that China has on the pork market, given the fact that they bought Smithfield Foods a few years back? What can they do? I mean, are they've got to be under USDA requirements and all the other stuff, don't they? I mean, what's your opinion on that?
Well, basically what they're doing is they're taking the technology that they had, okay, and are moving it over to China to create a more efficient pork industry over there. But in the meantime, they from time to time will import significant quantities of pork, and they can all of a sudden decide not to import pork, and I think that was reflected in the weakness yesterday. But mainly it's about operational excellence and health excellence that they're trying to move to China so that they can be as efficient and then therefore don't need to import. Right now, they look at, is it cheaper to import meal, is it cheaper to import the end product pork? Mm-hmm. And that's how they make their decisions.
Well, speaking of meal, I posted in the room here, meal hit $4.04 a ton, but it hasn't been that price in a long time. And we're at a 78% retracement of the highs we made a year and a half ago. Do you see any resistance coming in here, or is it just all related to weather, Rich?
It's all related to weather. The swings that I see are consequential. I mentioned how since 2016, the gasoline price has doubled. Corn's only up 13%. Copper's up 50%. We can have some consequential moves. Mm-hmm. You can look at the monthly charts and do your retracements and stuff like that, just like John can look at the monthly or weekly charts on the August cattle and do his retracements, and you'll find there's some interesting things to take a look at. But it comes down to timing.
Okay, I got one final question here, and then we'll let you go. When does the planting start for corn, and when does it start for beans?
Well, the big planting season starts toward March 31st. We'll have the acreage report of what the government estimates we're going to plant, and we'll look for more beans and less corn. That's going to be a market factor. But really, they start towards the end of March into the middle of April, and then into May. The government decides in each county when you can start and when you have to stop by, or you don't get covered by insurance. And these days, when you're putting so many dollars into the ground, you have to have insurance when you're planting. Virtually all farmers use the government crop insurance.
Well, they just about have to. They can't get loans at the bank. That's what Cy tells me anyway.
There's that too. Although the older farmers, they just got buckets of cash, and it doesn't matter.
Yeah, and you happen to be an older farmer, as I recall. Hey, listen, thanks for joining us, buddy. I really appreciate your help. And with this crop gets started, we're going to have you on more often because there's going to be a lot of gerrymandering in positions and all kinds of bad news, good news coming out. But thanks a lot.
There's a lot of the stock market, too. And don't forget, Nixon did a 10% tariff in 71, but the Smoot-Hawley tariff in 1930, that didn't work too well either. So
yeah.
We're on rocky ground, but the Harvard Business School teaches you that you take the most adverse position when you're negotiating. Those are the people that get the best results, and who's to say that isn't what he's doing?
He's a pretty smart guy, I think, but who knows? Hey, listen, thanks for joining us, buddy.
Everybody's calling it stupid right now, so we shall see.
All right, thanks a lot. We appreciate it. Rich Anderson of Anderson Capital Management. Okay, folks, we get back here to a couple of these questions that we had. One was about the gold market. We got as high as $13.26. That means we've rallied $23 from the bottom. If you're watching for a place to, to get long the gold, one of the ways you might want to do this is to figure the distance between $13.26 and $13.03, which is $23. And if you take a 61% retracement on $23, look for a $14 retracement, taking you down to around $13.12. And that would give you a very, very low risk place to be a buyer. You could put your stop below the 78% level, which would be at the 1308 level. So you only have to risk about $4 at that point. But buying it on a pullback would be interesting. If you're just looking for a 382 retracement on that, that's going to be pretty easy because that'll only be a $9 break. A $9 break takes you to 1317, and you would be 1319, and that would be a pretty good spot to if you really want to get into it at that level. So that's what I would be looking at. But however, I'm waiting a little bit because of the fact that the silver just didn't act very well, and platinum looked even worse. I don't know if that's related to the aluminum and steel and all the other stuff that's going on in the world. I'm not sure, but with the fact that Rich just told us what happened during the Nixon administration with the Smoot-Hawley Act, this will all change as it usually does. So let's keep our powder dry and wait and see. There's major support here in the S&P down here at this 2650 level that we talked about. Now, let's try 2640 level. Whether it can hold this level or not, we'll have to wait and see. But it's going to be interesting, of course, because we've got some, really weak markets starting out the day. And usually they don't stay weak all day long. If they do, that means the scenario that our friend from Washington was looking at of a really down day on Monday or today. Dow's down more than 500 today, folks. Don't go to sleep on Sunday night because they're going to be rocking and rolling all across the world coming in on Monday, because that means this lunar cycle that's there is not working, and that means there's something bigger down the road that could be very, very interesting. So we have to be very, very careful here as we watch these markets, because they're not for the faint of heart. That is absolutely for sure. Regarding the dollar index, it ran into a great deal of resistance up there, a little above 91. The pullback that we're going to have now is going to be interesting because we'll be watching the 124 level in the euro. If the euro can get above the 124 level, the dollar is probably going to weaken dramatically, because on the weekly chart, it is very important that that dollar index does not get below 88. That'll be a really game changer, folks, if the dollar index gets below 88. Regarding the Treasury bonds, we got that big rally. The ABC structure in the Treasury bonds went right up to that March level. In the June level at 144.18. We're trading at 144.07 right now. I believe we've got a chance for a few more points on the upside, but it did complete the first ABCD pattern, so we could easily get a pullback in the bonds down to this 143 even level, and that would be an area where there could be some support. But they're in a trading range right now, and I think we've got a few more weeks of a little slightly lower interest rates, mainly related to this U.S. dollar stuff that's going on possibly, but we'll have to wait and see. But we've got volatility coming, boys and girls. You can't ask for better markets than this. So what you got to do is try to protect yourself, get your risk factor in the best you can, and there's some great opportunities out there. We'll try to take advantage of them the best we can. You got some great information here at TFNN. So, take a chance and listen to some of these guests that we have on. They have some super ideas. And as some of the other folks at TFNN that give their shows, Basil and Steve and David and Andy, all of them, they do a great job. 877-927-6648.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've posted the chart that our good friend Bill Meridian from Cycles Research gave to us the last week when he was on. It shows the 30 years since the October 19th crash in 1987, that after 1 year after the crash, you'll notice every year, with the exception of two, that's just, really an amazing statistic. This only goes over 20 years. It doesn't go out to where we are right now, so it's only 20 years. But 80% of the time, after 1 year, you were up on the year. And after 3 years, all of them were up. And after 5 years, all of them were up. And at 10 years, all of them were up. So this has been a very, very strong trending market. The key that you want to look for is to try to find a really good break. And that's what you'd like to have of what was going to what was going to happen. So we'll see. Regarding the gold trade yesterday that I was looking at, folks, I actually bought that at 07. I got stopped out at 05. The low was 0360, so I missed it by a little bit. I was not there when the stop was hit, so I was gone for the next few hours, and I didn't get to buy the pullback because it rallied about $12, pulled back about $8, which was a perfect 78% retracement, which was another great buy at the 1307 level, and then off she ran. But you've, like I say many times, you have to kiss a lot of frogs before you find that princess, and that happened to one of the frogs yesterday. No big deal. Take that trade every time you can get it, and that's what I try to do, is to limit the risk as nearly as close to possible. Sometimes you have to give a little bit more room when the market's really volatile, but that time gold was not that volatile. It was trading in a range of $3 or $4 an ounce, which was what you really like to see. So we want to be watching to see what's going down. By the way, someone's just posted in the room that if we go limit down today in the E-mini S&P, that number is 2544. That's 100 points from where we are right now, folks. That'll make the news, that's for sure. And this is supposedly a big cycle day based on our good friend Bill Meridian, who's given us some great ones. And also, it's a day away from what Norm was talking about, Norm Winsky. 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.